Well, we look at everything with a 5-year investment time horizon. We do have a forecast for truly disruptive innovation in 2030. And we think, obviously, crypto is a big part of that. We believe today that all innovation, I think blockchain technology is going to be involved with most of the platforms we have centered our research on. So the genomic platform, genomic sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. We think there are going to be all kinds of convergences taking place. And we're going to go from $10 trillion in market cap in the public markets attributed to innovation, disruptive innovation, to $210 trillion by 2030. And we think blockchain technology is truly a revolution.
The disruptive innovation market, according to Cathie Wood and her company, ARK Invest, will increase from $10 trillion to $210 trillion in just 6 short years, and reach a value of $1.4 million by 2030. With the adoption of AI rising and cryptocurrency regaining popularity, Cathie Wood's thesis on disruptive innovation is starting to make a strong case for itself. The CEO of the cryptocurrency investment business, Mike Novogratz, joined Cathie Wood to discuss the size of the opportunity in Bitcoin and the whole crypto space at the most recent Crypto Bahamas event, organized by SALT. According to Mike Novogratz, there will be a lot of inflation, which will encourage people to use Bitcoin and drive up its price. However, Cathie contends that technology is profoundly deflationary and that over the next few years, there will be significant deflationary forces. This is in line with her disruptive innovation concept. It's fascinating to note that all routes lead to greater use of cryptocurrencies and higher prices for Bitcoin, regardless of your position on inflation or deflation.
The largest component of that is we do believe that Bitcoin will usurp 50% of gold's role. This is digital gold. So that's roughly a $5 trillion opportunity right there. So the smallest one is remittances. We think that it will take most of the remittance market. The remittance market is a $600 billion market. We have insurance policies, high net worth individuals watching, confiscation of wealth.
Right.
And with all the turmoil in emerging markets and elsewhere, the Middle East, who knew that MBS was going to take his cousin's wealth away? So don't they wish they had some Bitcoin and private keys? So also companies allocating some of their cash or diversifying some of their cash into Bitcoin. We've seen Tesla do that, Coinbase, Square, of course, MicroStrategy,
right.
And you're going to see some countries putting Bitcoin into their treasury.
Right.
We assume only 1%. So if you look at the building blocks, and then finally institutional, how much will institutional investors account for this? Well, we assume that institutional investors will put 2.5% of their allocation to Bitcoin.
Right.
And that isn't even as big as the global digital gold opportunity.
Mike, do you have a Bitcoin price target? And I'd love to hear too what you're hearing from institutions, high net worth individuals you talk to about why they're getting in or some of the biggest barriers to entry as well.
Yeah, listen, I actually go to sleep praying that Bitcoin doesn't go to $1 million in a short period of time, because that would mean civil society is broken down in the US, right? You look at a place like Turkey where you had horrific stewardship of the economy, right? Erdogan did just a terrible job. And their currency devalues, working middle class people lose their savings. And so in a lot of ways, Bitcoin is a report card on financial stewardship. And you hope that the US can get their act together between Chairman Powell and Janet Yellen. And if they do, the US, and then if Europe does, the West, isn't going to need to flood into Bitcoin, right? If we lose control of our economy, right? If we lose control of inflation, if governments can't restrict themselves and just keep, pay for all student loans, pay for it, it's really popular to pay for stuff. And confidence breaks down, you'll see Bitcoin really accelerate. And so I don't want it to really accelerate wildly in the short term, just for all our safety. I do think in the medium term, it's just going to grind, because there's almost no way we get out of this debt trap without inflating our way out, right? There's just too much debt in the US, in Europe, and around the world. And so you've got to inflate your way out of this, right? The US has got to run 4% inflation, act like it's 2%, and just hope it doesn't go this way.
Right.
Otherwise, we're going to have this debt that's going to saddle generations, right? And so I do think you're going to see Bitcoin grind up because of this adoption. People are going to be like, wait a minute, 7% inflation this year, 4% inflation, Bitcoin is deflationary, or pretty close to deflationary. And so I think it's a much steadier mission. I do think 500,000, right, that's gold, if you want to think about it. So just to replace gold, you get to 500,000, depending on where gold goes. I think gold's going to go higher as well. And so I'm a medium-term 500,000 guy, and I think we could get to 1 million at one point. But I don't think in the short run we want it that high.
Well, it is a new asset class, and it is the leader of the new asset class. And so I don't think it will be going up immediately because of a breakdown in our economic prospects. And I also think that all of the technology, I'm going to take the other side of this bet, I think the technology revolution, and it's not just blockchain technology, it's genomic sequencing, robotics, energy storage, artificial intelligence, all of them are highly deflationary, and all of them will be very destructive to the traditional world order, but they will present massive opportunities for growth. So I feel as though it's going to feel chaotic like it does now, but I do believe that we're heading into a deflationary world, and it will be very good for some companies. They will boom. You lower prices, you get more demand, but other legacy industries are going to be sitting there with stranded assets, and there's going to be, again, a lot of confusion about what's going on, as there is today. So we shall see. Financial services sector is going to have some days of reckoning. I think DeFi it's exploding. You're right. It cuts the middlemen out, cuts the costs. You know, as I mentioned, even so trading and sales, all of this is already being automated, right? And many people think on the asset management side we'll be safe. We won't be safe. You know, we're trying to figure out how to integrate ourselves into digital wallets. Which digital wallets are going to win, right? And we're also looking at this new asset class where effectively we have to not only manage the assets, but actually activate them. And that's a very different world.
So one reason it's such a big deal is the lion's share of the wealth in America and in the West is still owned by baby boomers, right? Millennials make up 30% of the workforce. They own 5% of the wealth. Sorry, guys, you guys got to get on the stick. And so the big wealth of America is owned by people that aren't as crypto literate. And so giving them easier access is a big deal. I think whoever goes first, Schwab, Fidelity, with their brokerage accounts, and it's just fear, right? They want to see one of them go first and they'll all go.
Right.
It's like when Paul Jones got in the hedge fund space and wrote that letter, it opened up the door for every other hedge fund to participate. Because now you can be right or wrong on the bet, but you're not going to feel stupid.
Is there anything on the regulatory side you think they're waiting for? We got the executive order, but is there something that could come out of Washington that would make them feel comfortable in the near term?
I think it's time. It literally is. Again, you know, Texas teachers wrote a letter that they're going to invest in both venture and coins themselves. Really brave thing to do for a big state pension fund. Strategic, right? Texas wants Bitcoin people to come there just like Miami wants them. And so they're saying, okay, we're going to send a message to people that we're future forward thinking. But that opens the door for other pension funds. Right. Texas teachers can do it, I can do it.
Yeah, and I think Cambridge Associates, which is one of the consultants to the pension world, they actually rang the bell for this. I'm going to say in 2018, they wrote a report to their institution saying, you may not like this, but it is a new asset class, and you have to make a decision one way or the other. So that was a little bit of a booster, but then many institutions are looking at the regulatory environment and saying, well, okay, that's not clear yet. I don't think we can take this risk. So, once we get clarity, more clarity, and I do think the president's executive order is important, getting everyone in gear. And I think really important is Janet Yellen, Secretary of the Treasury, a year ago, I was asked, probably on CNBC, why she hated, why she was so down on crypto, the environmental, the illicit activity, and so forth. She had nothing positive to say. Boom. 1 year later, the president and I'm wondering, okay, someone's whispering in their ears.
Yeah. Oh no, it's not someone whispering. It's the crypto community yelling.
That's true. That's true.
There are 50 million owners of crypto in America, probably 25 million really passionate single-issue voters, and so Democratic politicians had a wake-up call. I mean, it's shocking. I'm a Democrat. Cathie's not, so we can be on both sides of the aisle. How many politicians are reaching out to Galaxy, to me, say, hey, can you educate us? They realize they need an opinion. Being anti-crypto is really bad politics.
That's it for today's video, guys. I'll see you in the next one. Thank you for watching.